Well, quick question. Given that it seems more and more of the world is going to a free market economy, and you see some countries like Turkey and Brazil, huge population growth, what effort, and you know, the U.S. we alluded to is maybe on the edge of not doing so well. What efforts is Nicola making to look at more global opportunities and sort of free up from the U.S. in the long term?
Well, I'll take the first step.
Yeah.
We've established a foreign equity or global equity fund, and we have 4 managers in the fund. And one of the managers we chose, it's the managed by a company in San Francisco called Matthews, and it specializes in Asia. And that was a conscious decision on our part to try and get exposure to that faster growing region of the world. So, you know, you have to be careful though, because, you know, when you look at areas like China and Indonesia and even, you know, I could say Eastern Europe, you know, that might have that, you know, demographic or faster growing economies, you know, it doesn't necessarily mean companies in, you know, that are from Brazil that's going to do very well. I mean, I think that there's a lot of great European and American firms that they're very, you know, very much targeting those regions, and they will benefit as well. But, you know, you also want to sort of, we've sort of overweighted that region in order to take advantage of some of that.
Yeah, and just to add to that, I think it's important to understand we don't actually invest as a matter of principle in countries, and we don't. When we're buying real estate as an asset, for example, the key issue is the individual asset. It isn't so much that we're in the real estate market. It's we're buying a particular piece of real estate in a particular market that has conditions and terms on it that we think will generate a certain return. When we buy shares of a company, it's much the same. So I could make a strong argument that if I believe strongly that farming is going to require a lot more fertilizer, I'm probably better to make that investment not in the agricultural development of Brazil, but in the shares of Potash Corp, and which is a Canadian company, obviously, you know, generating a large part of its return from selling to the varied countries, the global countries that need that product. I could make the same argument for Canadian oil sands when it comes to the issue of looking at this from an energy perspective, and that the driving factor behind energy demand is coming from emerging markets. So I think you can play emerging markets a number of ways, and one of the things that's an issue always for us is the issue of transparency of markets and the ability to have sort of a, you know, what they call the rule of law on your underlying assets. And so far, the liquidity, both in European and in North American markets, is certainly superior. So while I have no issue with us having offerings in emerging markets and global markets, at the end of it, when we look at a manager, I'm still far more interested in what companies they're choosing to actually invest in as opposed to what countries they're choosing to invest in. I think that's the critical decision.